Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 14th COT report in 2014. As usual, we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got Soybean Meal on top of our list with a 26% change in commercials positions. You can see the change size over here. It is, of course, as you may see, a bullish COT change signal. Nothing too unusual. We do see greater changes pretty often in soybean markets. This time we have this bullish signal. Opening a 5-year chart, I can show you how extreme this market has become. We can start talking about a relative bullish extreme. If you look at the past roughly 3 years, you may see that we have reached a significant extreme, but of course pretty far away from all-time extreme levels. On this 5-year chart, you can see what I'm talking about. Anyhow, these relative extremes may also influence price, as I'm showing you right now. So I think we are at an extreme level where we should be cautious in trading and consider the fact that the market may turn upwards. Gold is our next market. We have a 17% change over there in commercials positions. You can see the change size over here. Here we are talking about a bearish COT change signal. As you may see, small speculators have made a more drastic change in their positions, 22% change over there. Opening the 5-year chart, let's have a look at the extreme. Here we go. You can see that we are moving away from relative bullish extreme levels, not surprisingly after seeing a bit of a rise in prices in the past few weeks. So there's no surprise about that. This, of course, does not mean that we may see the end of this rally. We are pretty far away from relative or even from all-time COT extreme levels on the bearish side of the market. Feeder cattle is our next market. 15% change in commercials positions over there. It's a bit difficult to see the change size, but you may see that we have seen similar changes pretty often in this market as well. Let's just jump to the 5-year chart because COT charts are going to be more visible over there. Here we go. You can see they're much nicer. What's interesting to see is commercials and large speculators are almost holding the same net amount of long contracts, and only small speculators are bearish in this market. Of course, this is not that surprising at all, since if you look at the past 5 years, small speculators were always bearish about this market. And of course, a lot of commercial participants are actually in the small speculators category. So anyhow, let's see what the extreme tells us. We are a bit away from bullish extreme levels, but also from bearish levels. So I wouldn't say that we have anything to evaluate on the COT extreme side right now, or at least it's hard to come up to any conclusion. So it's really the COT change that may be in effect in this market. Moving on to large speculators COT extreme, here we have the lean hogs on top of our list with 150 report extreme in large speculators positions. Roughly the same roughly the same extreme in commercials. It is a unquestionably large bullish COT extreme signal. The last one was back over here in 2013, and as you may see, it was a pretty decent signal back then, really catching the bottom over here in the market. We had a larger extreme back here in 2012, again a good signal, and a few more back in this past 5 years. So we have this large bullish COT extreme signal. We are expecting price to react to it, and I think you should be watching out for lean hogs in the next couple of weeks. Cocoa is our next market with a 103 report extreme in large speculators and also in commercials. What does that mean? That means we have a relatively larger bullish extreme, but again, we are not close to all-time extreme levels. But of course, relative extremes may also influence price. It's just harder to react to them because we don't know how further the extreme may widen. But anyhow, it's there, and if you were considering any trade in this market, it's good to know that we have a relative bullish COT extreme. And last but not least, we have the Russell 2000 with a 51 report extreme in large speculators positions. Here we go. And that really isn't a extreme that we can talk about. It is a relative bearish extreme. Of course, we're not surprised to see that at such price levels, but I wouldn't react to it or react to it very fast, but rather look at other indexes as well. Do your COT analysis, and of course your other technical analysis to determine whether you would enter into this market. As you may see, we are pretty far away from really large bearish extreme levels. Maybe small speculators are the only ones very close to their all-time COT extreme, so that's something to talk about, but I wouldn't say that large speculators or commercials are that extreme at the moment. Okay, if you would like to have a look at other COT charts, you can do so at our COT charts page. If you'd like to have a more in-depth and detailed COT analysis, then of course this is the page you should be looking at. You can add the long-term trend to the table. Of course, you can look at the volume and open interest scores and the COT index as well. Of course, look at all major market categories and other COT report types, as well as other data types as well. Of course, you can do your historical analysis on older reports as well. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.